What's up, YouTube? This is Martin Day Trades. Um, Today I'm going to be going over my NAS 100 trades. Um, I'm going to show you guys where we were anticipating our entries, where stop losses should have placed. Guys, I went in short right here, and as soon as I started getting into profit, I moved my stop loss like this, and I was going for 200. Where's the 200? Oh, that's about the 200 level. Um, and it stopped me out right here. I'll zoom in so you guys can see that. So before I had gone in, let me check that value real quick on my phone. It was like right there. So I'm gonna show you guys my entry on the camera. Hopefully you guys can see it. This is the area where I'm talking about, where there's a red arrow and then a blue arrow. You can see right, uh, you can see on the right side right here that my entry, how price went down, and then it went, come on, and then how it went back up, and it stopped me out barely by 3 pips. I measured that, and the wick that was created right along here is only 3 pips high above my entry. So I should have just kind of kept it at like for the 25 pips I was risking. But this is where I got stopped out right here, guys. I had it at, and I think there's a 7 point discrepancy, but my entry was at 12,114. So right there, 114. No, it's okay. So 114 here, guys. I'm gonna write this down on my sticky notes because sometimes I get confused. 114. It's there's 7 point discrepancy here. So the trading view is 7 pips higher than FTMO broker. When you're using this on TradingView, when you're using the Oanda charts. So so you can see here, I could have easily, this was 25 pips right there. This is easy 1 to 4.5 risk to reward, and I missed it because I was like, I didn't want to give back any of my profit that I made today, and I got a little greedy, but hey, it's not bad. I had won my trade, and then I wanted to get in short because I had missed the short, and I had gotten in here for the long. So as soon as this happened right here, um, or it got down here, I went long and scaled out my position. So I caught this move right here, from right here to right here, and then I waited for price to come up to this almost the 79%. It didn't really get there, but I knew this was the fair value gap right here, guys. Remember how I taught you guys how what fair value gaps are? If you watch one of my videos I've made beforehand, talking about TradingView tips and tutorials, you can see where how I mark out my fair value gaps. And there's a breaker block, so it's the last up candle before the down move, or the last down candle before the up move turns, I broke through it, it turned into a breaker block. So this right here was a high confluence area, had the eye. I said, hey, I missed the short opportunity. I was gonna wait for a retracement for a price to pull back to hit it hard with all the other smart money concept traders at a specific level, and I entered, but I moved my stop loss to break even. After I didn't not follow my rules. That once it got to 1-to-1 risk to reward TP1, I moved my stop loss from -1 to BE so that it was a risk-free trade. Price just came back, took this liquidity here. See that by like 3 pips. 3 pips I got stopped out by essentially. But and then it came down, and it's now, I don't know how many points this is. It tapped a little earlier in the London session. It was 168 points, which isn't bad. I was looking for the 200 level, which is right here. Um, it was a 1 to 4.5 risk to reward day, but it is what it is. I know the market's now bearish for short term. Might be another bearish day tomorrow, depending on what London does, because there's this short term bearish to buy right here, or it may come down lower that we anticipated for this move down here. Okay, so I measured from this expansion from here. Oh, I guess I could technically move it, because what it was this boom, and then this happened. Now I'm waiting for a move to happen to come down into this 11,500 level. As soon as it gets down to 11,500, I'm going to be bullish again. And let's go ahead and see how the day candle played out. I want to teach you guys a little something, how to read Japanese candlesticks. So we look at yesterday's candle or the couple previous days. I'm going to teach you guys the flow, the storyline behind the price action, the flows of these Elliott waves here. So you can see there's these momentums building up, momentums building up, momentums building up, and then there's like a deep retracement for a move higher. So you can see that there's like these levels being created. And then this move happened on Friday, gargantuan move right there, right? Uh, so then yet yesterday as this day played out, it didn't lost its momentum. We knew it needed to come go short eventually because of how London traded. And then it created this doji at the top. You consider that a doji right there. This candle is kind of flat. So how there's a lot of action there's data in this candle right here on a daily time frame. So I want to know what the daily looked like. So that's when I go down to the 15-minute time frame, zoom in a little bit, and I can see how the day traded, and I could draw. So the candle turned into a bearish candle. That means if I could draw this out for you guys, boom, boom, okay. That means price went up, created this. So price came. There was the 12 a.m. open. Boom. Started the start of the middle of the candle. This candle goes up, and then we were waiting for it to get to a certain level, and then we shorted it, and we were trying to catch that whole expansion downwards, guys. See, and then price pulled back up. So if we can draw this out, so price came up, came down. Oh wait up, before this happened, it was like this. It came up, came down, came back up, and when it the candle should look like this on the daily. So then we go to the daily because we see that there was this 12 a.m. open, which is like right here. So price came down, came up, created the top of the wick, which is this. This piece right here is this right here, guys. And then it had its expansion downwards. That's where we got the body going. It was bullish, and then all of a sudden, boom, sold it, and it created a body, and it created a low down here, and then it had a small pullback up to right here. So that's where you get this wick. It's because it came down, targeted this 12,000 level, and then came back up. So this is how the daily candle should look like. So when we go down here to the daily, we can see, in fact, that's exactly how the candle. Cause remember, the 12 a.m. open, then it came up during London and New York, and then or London kind of came down. New York started trading up parts higher. As soon as it got to this level, that's when the bears came in and sold it off, and then it came down, and then towards the evening it traded upwards. That's where you get this wick. But then Asian is trading a little lower right now. That's why we're getting this dark body as it's being created. Is because Asia is start of new day is pushing down a little lower. So we know that this move is bearish. So right now, guys, do not trade against the trend. Be bearish. Wait for pullbacks. Don't be crazy, and don't be trying to trade against the trend. If the trend is bearish, be bearish. Don't fight it or try to catch those 50 pip retracements. Wait for the bigger move, 100 pips, 150, 200 pips, whatever. But just trade with the trend. It's not going to be long term. I think moment we'll see what happens because now price is falling, okay? For price to be in a true bullish market, price needs to break up above 12,850 again. Break market structure. So we have remember how market structure, guys, is. If you guys don't know what, oh, that's a good one I should write about. I'll talk about is market structure. I have to do another trading view tips and tutorials, guys, just on this topic. Trading view tips and tutorials. Uh, market structure. So that's how you determine what phase the market's in. And right now, it's been bearish since December 2021. So this whole year, we've been fucking bearish. 6 months, man. These are some lows. Everybody's feeling low right now. We need a fucking bull market. We need a fucking bull market. Get these highs up again, you know? But we see this expansion though here, guys, but it didn't break above this high. So we have this market structure where it goes down, up, and it could retrace higher. But if it breaks up above this, it's now creating a higher high instead of a higher low. So it had that break of market structure, but it could be a false breakout. So we have to wait for some support in a strategic area where we're going to be identifying high confluence area. And if indeed, in fact, the bulls buy up at that level, we'll have a short stop loss. It's a new shift of momentum, guys. We'll be bullish again, because market structure transformed after this 6 month period bearish market structure. The phase will change bullish. I don't know when, but right now we're still bearish. So we had this bullish momentum, but now my bias is bearish until the foreseeable future, until momentum shifts ways to the buy side. But yeah, guys, this is the NAS 100 daily range. You guys saw my trade. We're keeping up with the know-how. Where's the money going? You guys can call it money. You can call it bison. You can call it whatever. As a species, we're hunter-gatherers. So when you see, we're just hunting other people psychologically, essentially the money, right? Hunting it. So we'll see what happens, and see where market goes in the morning. I want to see how Asia trades and then how London reacts. Because if we can see what kind of setups being that gives us, either a New York reversal, bearish or bullish, or a London continuation, bullish or bearish, depending on how the price action happens. There's only going to be four things, and if nothing lines up with those four things, then it's going to be most likely a trending day or a no trade day. There's going to be low volume because the market hasn't decided where it wants to go, and smart money doesn't really enter the market until it's a high confluence area. So as people are kind of trading within a range, soon as it gives a opportunity, London and New York sets up the move. That's when we jump in and take advantage of that volatility. A lot of the big money's entering when we enter. That's why the you see the price move so much, is because big money's moving the markets. All we're doing is trying to capture that movement from our home trading offices, right? It's we're not big enough to move the markets. All we know is have faith that there's gonna be liquidity in the markets if what you're seeing on this computer screen is true, and having courage to just take those trades, and having faith that there's gonna be those liquidity, there's gonna be volatility, because when the volatility comes in, knowing the skill set, we can really capitalize on those expansions of price. So as price goes high, we catch the expansion all the way down, or if price is low, we take the liquidity grabs, guys. I have video on liquidity grabs, stop loss hunts. We look for those high confluence order block, fair value gap, Fibonacci levels, big figure levels at time of day. New York session has those moves, for especially if you're trading the US indices. Now if you're trading forex, you're going to want to trade London session, but that's a whole nother subject. um but yeah, guys, I'm gonna let you guys go now. This was my day trade review, NAS 100, June 27th. um be back tomorrow. Actually, I'm gonna do another video tonight, guys, because I forgot to do my weekly analysis markup yesterday. So I'm gonna erase today's data, but do a weekly analysis, weekly market outlook for you guys, so that I can have it documented and get more views. But if you guys found this video valuable, please like, comment, subscribe. I made 0.5% today. I lost 1%, so the second trade I made 1.5%. So I'm happy about that, guys. I could have made almost 4 or 5% today if I didn't move my stop loss to break even so fast, which would have been nice. After having a bunch of L's. I took a bunch of L's recently, guys, and I had to take 3 days off plus the weekend. I caught up on a lot of stuff, but it's one of those things where it's like I'm not even getting paid to day trade, but I know in the future it's gonna pay me. I have that faith, and being the person that stays at work the longest and just has to put in the time, like it's kind of stressful, but um I know in due time, doing these daily ranges, doing my weekly market outlooks, doing the videos for you guys, it's gonna help me cement my knowledge in my head, because now I'm speaking it out instead of just looking at the screen with my eyes and just doing my own thing. Like, and when I talk out loud, it helps me see and identify, and I'm more on point with what I'm seeing here, guys. And I'm learning, guys. So I should have kept my 25 pip stop loss because it had very high confluence that it wasn't going to go higher than that, and then it wicked me out 3 points because I wanted to move my stop loss. So patience is key, guys. I, if you're listening to this and you're a new trader, I highly recommend do not just do not care about trading. Just take your trade a day, stick to the process, and have faith that the ratios work out. Once you start wanting to be in the market, you're gonna get emotional, and that's gonna be a bad habit in the beginning until you can break it. But I'm at that point, guys, where now I'm just like, I don't even care anymore. Like, I just don't. I just want to fucking do good, get on with my fucking day, finish the day, be back tomorrow, and just see what happens. I know that things are gonna work out, and especially with the like real estate side of things, guys. Too, those are things are stressful. Eyes, 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 and stuff in the shop are wild, but it's all good. I have my time in the future, and I hope you guys can follow me, like, comment, subscribe, and see this journey because um I'm one of those people that will never quit, and that gives me energy towards this dream. So take it easy, guys.